Folks, this is Wesley Wood with Wood Financial Group bringing you your March 2016 economic update. I'm glad you've tuned in for this episode because there's a lot of stuff that's going on out there in the markets as well as the economy, so hopefully going to shine some light on exactly what's going on. Be sure to stay towards the end of this video for some important disclosures. Well, January in the markets was not very good. It fell quite a bit. February really didn't give us a whole lot of evidence that we're going to see a huge rebound anytime soon. But that being said, there are some good things that are going on out there. You've seen the markets drop substantially, mostly due to the collapse in oil prices, the emerging market sector, as well as the slowdown in China. And there's a lot of economists out there, or a lot of things out there that you'll see on TV and in the news that are predicting some type of recession due to those issues. They're not totally baseless, but if we look at what's really going on with our economy, it's not as bad as you may think. Last month, the labor market added 51,000 jobs, meaning the unemployment went down a little bit. In order for us to be in a recession, we'd have to have a slowdown of our economy and a negative GDP for a couple of quarters in a row to actually be in a recessionary environment. So we're not there as of now. Obviously, what's going on with the oil prices being as low as they are dragging down a lot of the emerging market areas. And then with the slowdown in China as well, it's really affecting a lot of the European markets and everything over there. So we are having a negative effect on our markets here due towards that. And also just volatility is really the name of the game right now. But looking at the U.S. alone, our economy seems to be doing pretty decent. Now, if you look at the S&P 500 company stocks and earnings last quarter, they were not as good as predicted. Matter of fact, about 3.5% off of the earnings estimates and targets. But if you do remove the energy sector from that, we actually did see an increase of about 2.5%. So taking the energy sector out, there was a healthy growth of earnings through companies in the U.S. of about 2.5%, which is pretty good news. Obviously, we continue to expect a lot of volatility. There are major issues going on out there. As an investor, we recommend remaining very cautious, but sticking to the plan that you have on hand. It's a great time now to have your retirement picture looked over and reviewed, which we're sitting down with many clients right now, especially during this busy tax season, looking over where you are, making sure that the risk is appropriate for your goals. If we need to take some risk off the table, this may be a good time to do so in case we continue seeing some volatility moving forward. But if you have any questions or you have any concerns, you'd like to give us a call, 615-826-5749. Also visit us on our website at woodfinancialgroup.net. Also our Facebook page you can find at Wood Financial Group as well. But thank you for tuning in, and see you next month.